Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 2nd of July, 2020. And here we are approaching, the 6 p.m. time frame already. Interesting day. You know the market was focused on two elements today: jobless claims and employment data, the jobs data. Well, the jobs data was great. We added 4.9 million jobs. Come on. You're down to an 11-point fraction unemployment rate, getting close to what many of us think will be that 10% or under number maybe by the end of the year, depending on how bad COVID gets. And that is the wild card in all this. We don't know what we're dealing with. You know, you're getting a big holiday weekend in Chicago. They've already just put out that if the mayor sees that the bars and the restaurants are breaking the rules, $10,000 fine, and they'll be shut down. So they're not going to play games. We have been very, very stringent on this. We had a real problem the last holiday that we had here, and we're going to find out just if the kids pay attention, if the restaurant owners do. That's going to be the important thing. So we've had a bull market run on the stock indices. It's still good. You know, the market's going to eventually have to deal. Is it getting ahead of earnings? What's going to happen down the road? But so far, it's acting pretty darn good. So let's just go to the charts and let them tell us the story. So far for the week, and I'm, by the way, not going to do tomorrow any video. So this is the wrap-up, if you will, for the rest of the week. And my rationale is I'm entitled to a vacation like everybody else. We are open in the futures until noon, but these are abbreviated sessions, so you won't get an awful lot of action unless something around the world happens, because the stock market is closed. The cash markets and bonds and other things, they're all closed too. So as we take a look, you're up 122 points for the week. The odds favor that you're going to stay up for the week. The question is, can you get over these highs and break the pattern of lower highs, lower lows? So far not. So we're in a correction mode in a market that has upside bias because it remains over what? The 18-week moving average. A simple way that I look at bias: if the market is trading over the 18-week, I have bullish bias, under bearish, and that triggers other technical studies. When I go to the S&P 500 chart, well, I still tell you, we're caught between this high we made there and the low right through there. You have not come out of that, and I've been saying this for a 2-week period. The pattern, not trending. You have a lower low, a higher high pattern. That's where we're caught, still in between there. We're over the 18-week average. We had come down earlier at the end of last week and the beginning of this week, challenging the 200-day average, and we've managed to get back up and over the markets. And if it wanted to go back to a neutral stance tomorrow, the 18-day moving average at 30.83 is the number. It's a big break, 40 points. I don't know if the market has it in it for that. What about the Bollinger Bands, and why are they important? The black dashed lines are called Bollinger Bands. They're an algorithm that is designed to keep the market trading within them 95% of the time. Now, they have a personality. They can be wide or they can narrow in. The more they narrow in, we go into what we call a pipe. Often it's accompanied by sideways action. And just think of prices to spring. It's rounding itself like this inside of it, all wound up, looking to break out one way or the other. Often the sideways action will determine if we have a base or do we have a top in the market. That's what I think we're developing. The momentum which leads price is overbought. Any reading in the slow stochastic that is over 80, in my opinion, is overbought. In fact, when it gets over 70, I think it's overbought. So I think we're still very much in an overbought market, a lot of resistance in the 3174 area, the upper Bollinger Band, where when you hit it, you often run into a brick wall. Support in between the 18 and the 200-day average, and not a swing line trend. The powerhouse market remains the NASDAQ, but I'm a broken record for I don't know how long telling you that it's the FANG stocks, it's the Teslas of the world. That's where the market is really looking at on breaks. They keep coming in. Are we trending? Well, you made a new all-time high, so I think we know we're in an uptrend, but not according to the swing line. It still has a pattern of a lower low and a higher high. I want to step back here with you to this. This was Tuesday's action. The Bollinger Band on Wednesday, You had a high of 103.10, and the Bollinger Band you finished here, and the Bollinger Band 103.10. So now you're looking for the market. You missed it by 0.8. I mean, you're pretty darn close. You hit it today the first time for good measure. Generally, when you hit a Bollinger Band, you back off after that. If you have an embedded reading, it's different. You're just plain overbought in this market with these readings. So I admit, market is strong as can be. I'm the first one to tell you, and I write it in my report. The market, you don't want to be short of the NASDAQ. You don't want to be short XLK, in my opinion at least, in the spiders. When I look at the Dow, this is the weakest of the markets. Why? Well, let's come over here. Let's go back to this high. That high is 26,294. We see that we broke from there. We rallied yesterday. Let me get you up to this, which is today. Because we are, remember, I'm already in Friday's trade. This is Thursday. But I said in my update, I wouldn't be surprised if the pros are selling short against that 18-day average of closes, and they did. And they're still in a downtrend. You'd have to take out that number to scare them. I'm not keen on the risk over a 3-day week and all that weekend. Nah, I like to leave it alone. But the trend is down. The bias is temporarily trying to stay up, and the question is, can it stay over 25,709? We'll find out, but it's just playing it intraday. The Russell is stronger than the Dow, but it still has a lower low, higher high. A lot of resistance at the 200-day average and the Bollinger Band right through here. So you can see these numbers, 1473 to 1470, let's call it. That's your big resistance zone, not a trend, and momentum flattened out on you. When you come to the VIX, it's still dropping, and I gave you a tip yesterday, and I'll stick with it. When you're in a downtrend in this market, what are you looking at? You're typically looking at then higher stock indices. Now, we're dropping again, and I think that if you hit on Monday, 24.95, I think the pros are going to write puts. And I think they'll try to see if they can get the market back in here. So far, this has worked a number of times. Until it stops working, it looks good. So that's what I think is going to happen. Market is oversold, not locked in with an embedded reading. That's what I think they're going to do. Doesn't mean I'm right, by the way. Maybe they won't. In the T-bond market, we have a pattern still of higher lows, higher highs, bullish. Now, we had lost the embedded reading. I think the pros will goose this market down to the 18-day average. I said that the other day. This is where you were. What's the 18-day average? Today it was 177.13. You went to 177.9. You did it. So losing the embedded reading sets those type of plays up often. I'm going to repeat myself. Not all the time, but enough where I consider it in my trading arsenal. It's the only trade that I use against an 18-day average of closes because I think the market can return to it. And take the name of the chart off. I just believe in it. I also have a stop that I figured out years ago that you put on these, and you don't do anything where you just have open risk. In the 10-year notes, the market lost its embedded reading. Today it got down to that, and you're bouncing. But here's what you're really doing in this market. You're forming a pipe. Do you see how narrow this difference is getting? All the volatility came out of the market. Could be a combination of July 4th, could be other things in the marketplace. I don't know. Trend is up, but I'd be very careful. You've got divergence in this market. I don't think it's the place to be. Dollar index. This is a classic case of a pipe, not super narrow, but recognizable, that sideways action that you don't get follow through in. You're thinking you're going to run up to the upper band, you don't get it. You fall back, you think maybe you can get something going on the downside, you don't get it. A difficult market. And the flip-flop of it is right here in the eurocurrency. It's doing the same thing but hasn't formed the pipe. That is not what I'd call a pipe. I'd call the dollar index forming the pipe. When I take a look at the yen, it's forming that pipe again. So we came down, you hit the lower band here, you had one shot to come out, and the market gave you the bounce. The trend is still down, the resistance is right here. Stops are probably going to be right over that high that I'm pointing to. You can open your own charts and see that. Bitcoin not trading tonight. The market, apparently the market, I don't trade it. I watch it and I bring it here for you, but I'm talking trading it in terms of telling my clients, buy here, buy there. Nah, we don't really do it. Our Wedbush, the firm I'm with, is not keen on this market, and that's okay. That doesn't mean they won't be. It's just, we like to see a little more action in the market and more history. It could be that at the end of the year we will be doing something, but we don't know. You're oversold in a market that's been playing around with lower highs, lower lows. Looks to me like I should have removed this and had the arrow point down there. And with this current action down there, we're back in a downtrend with support at 90.75. I just missed that. In WTI and Brent, differential. Well, it's bumping to the upside now. And as you can see, SEP Brent still in an uptrend, but I'd be cautious. You're very overbought. You're getting close to that upper Bollinger Band. And no, I don't think the market's going to bust through it and take off. I could be wrong. But so far, each time it's hit it, it has done the opposite. And that's what you pay attention to. You look what's working. And until it stops working, it's good. You've got the higher highs, higher lows in the August. Same thing. So they're just drifting here in uptrends. But I'm not looking for much on the upside at this point. Rebob gas, market's caught at the 18-day average in a pipe. Very clear. In a pipe. Very clear. In a pipe. Very clear. Wish you went to school with me. I'd have you raise your hand. What did I just say it was? You'd all say pipe. Lower low, higher high, sideways action. What about the next chart, the nat gas? Well, it's still in the bear camp. We have the pattern of lower highs, lower lows. No. Lower highs and higher lows. You're neutral on this chart all of a sudden. Momentum up, you're fighting your battle at the 18-day average. To get bearish, you've got to get under the 170 level. I was not super impressed with the action today. Yes, it was up on the day, but nothing material in a big manner. And they had a huge draw in this market. They put in well under what the trade was looking for. Didn't carry the market. So be careful when you see that. I want to remind you about my charting course. A couple of times a year, and this is one of those couple, I discount the course for a brief period of time. This is it. America's birthday, July 4th. So instead of $199.95, which the course is going to be on July 5th, it's $99.95 for the next 3 days. I teach via first showing you PowerPoints and videos, then how to apply the chart on your charting software, or mine ideally, and then I teach you how to work with these. It's 6 hours of videos, 54 of them. I walk you through everything. You get all this information that you're seeing right there. And the beauty of it is, to me, you learn a trading discipline and an idea. It's only 5 indicators. You can do it. They're not hard to understand. I teach by repetition, and I think you'll enjoy what it does because I drive it home. Just go to our website under the word education. You've got it. You don't need a discount code, but I tell you next week, $199.95. If you want it, don't misstep. You have a great weekend, folks. I'll see everybody Monday.